Hi, this is Bruce Himmelblau, Blue Sky Video Productions, and today's question is, do you know your numbers? What are the most important KPIs in your business? And today's guest we have is Aki Jackson, who is a business coach and one of the guys I know who really can explain what a KPI is and why you need to know what a KPI is. So welcome, Aki.
Oh, thank you, Bruce. Thank you very much for having me this morning. I'm looking forward to the show.
Yeah, so before we get into the actual topics of what a KPI is and why you need to know what your KPIs are, what's kind of your background and what makes you an expert in this field, although you are actually an expert in the field?
Thanks for the question. So, Bruce, I have about 40 years of business experience, almost 10 with Ernst & Young, about 25 with Abbott Labs, and then almost 6 years now on my own. So I do have quite a bit of experience. I'm a CPA, certified public accountant, member of the AICPA and the Texas CPA societies. So I've served management at all levels. So I think I know my way around business and numbers and finance quite a bit.
Yeah, so again, most people, when they start a business, they say, well, I know how to make widgets. Let's go out and make widgets. And that's all they look at is, I can make a widget for $3. I can sell that widget for $5 and I'm making a profit. But there's a lot more than that to that, right?
Oh, yes, there is definitely a lot more to that. Because what I found in my experience is that most people are technicians. I mean, the people who make the widgets, they're technicians. They are very good at what they do. A doctor is a technician. He's very good at what he does. But most people are not good business people. So they don't even know where to begin to look at the kind of things that we're going to be talking about. Like, for example, you asked about the cost of things and price on things. Most people think, well, I can buy it for $2 and sell it for $3. And they think they're making a profit at $1. But is that really what it costs you? There are a lot more things that go into it than just the cost that you paid for it. You have to think about the costs that you pay for the item. You have to think about the labor that you put into the item. You have to think about the overhead, the utilities, the things that you pay for, your rent payments and all that. Have you recovered all those costs? So you need to be able to put things down on paper and look at everything. You have what we refer to as variable costs, as fixed costs, as semi-variable costs. You need to be able to cover all that. And then you need to put in a little bit of profit for yourself, because
Right.
you have to take money home at the end of the day. If you don't put in a profit for yourself, then you're working for everybody else and not for you.
Right, because a lot of people who have their own business, who pretty much are a solopreneur, they figure, okay, if I got cash in the bank, I'm making money.
Yes, then that's a wrong idea. That if you only have cash in the bank, you're making money. No, there's a lot more to what goes into making money than having cash in the bank. And I usually tell people, you normally need to have enough cash in the bank to cover you 3 months of fixed expenses. Do you have that? And a lot of times they don't have that. Just like even in your private life, you're normally told that you have to have enough savings to cover you for 3 months of expenses. It's almost exactly the same in business. But then in business, you have to think forward as well. You have to grow the business. So you have to have some capital in the back to be able to grow the business depending on what's going on.
Yeah, and that's definitely putting people to a test right now. Is over the past 3-4 months, businesses have either shut down or in way scaled back. And we've seen a lot of businesses that have actually gone out of business because they didn't have that reserve to retain and stay in business.
Yes, that's exactly right. Again, you find, if even we start from the beginning, most small businesses fail within the first couple of years, if even that much. Why? Because they do not have what we call a long runway. You have to have enough cash in the back to support you until you get your business up and going. You know, when you go on a plane to fly, get in a plane, there's a point what's called a point of no return. And until you get to that point of no return, you have to have enough power. You give full power until the plane takes off from the runway. People don't have that in their business. That's why when something like this happens that's unexpected, the number of businesses, big and small alike, that are going to go under, it's unbelievable. It's unbelievable. We are just beginning to look at it. and it's going to come around soon. There's going to be schools, churches, you name it, restaurants, hospitals, you name it. There's going to be a bunch of businesses that are going to be shut down because of this COVID issue. And that's because, again, they didn't have proper cash planning, one, and then that just got exacerbated because of COVID.
So what is one of the tricks about putting money in a reserve? Because there are companies like Apple that have like $100 billion in cash reserve. And there are other companies that don't even plan on more than a month ahead of time. So I guess that brings up this topic, which is cash flow. So how do you determine cash flow, and how important is cash flow?
Cash flow, you've heard the saying, cash is king. I think cash flow is king. You have to know exactly where your money is going. If anybody can call their cash flow to within a few $1,000s every month, I doff my hat to you, but I don't think it's possible, because things happen. Things happen that you don't expect, and you have to have in the back something to cover you when those things happen. I tell people, having a line of credit when you get into business is as important as having insurance. You need it before you need it, because when you are doing good, the banks will give you a line of credit. As soon as things start to go bad, they will not give you the line of credit, because they want to make sure that they get their money back. So you need to make sure that you have proper planning. And again, this is a management skill that not all managers have. The companies that you mentioned that have a lot of cash flow, they have priced their goods properly. They have sold enough. They have created the market that they needed to sell the amount that they need to sell to stay in business. Let's take a look at Nike. If I say just do it, you know exactly who I'm talking about. They've created this cachet for themselves that they can sell a pair of tennis shoes for $200 and people will run and buy it. Those are the things that you need to do. You need to create the environment where people trust you, they trust your goods, they know they're getting good products from you, and then you can price almost anywhere. Yeah, because you almost have no competition, because you're in a space all by yourself. That's how you create the wealth that you do. Look at Amazon. Amazon started off selling books, but they sell everything. They're one of the biggest players on the web, because they have servers that big companies like Discover Card all use. So they're making a killing, especially at this time when being on the web is so critical. So you've got to know what the business is. You've got to have the good management to plan ahead and have visions of where you see yourself being, and then you plan towards that.
Right. And you just kind of alluded to the topic of price. And price actually also ties into value, because if you have value in your product, people will pay your price once they see that value in it.
Exactly. And people look for value. They're not really concerned in price. You don't want to be arguing with somebody on price. If you can prove to somebody that there's value in your product or your service, they'll pay you what you want for it. You need to convince people that you're going to relieve them of some pain that they currently have, or you're going to save them from even having that pain. And if they believe you and they can trust you, integrity is key. If they know, like, and trust you, they'll pay you any kind of money, because they are really buying you. They're really buying you. So you need to be able to prove to people that they can trust you, and then they'll buy stuff from you at any price you want.
Yeah, that's whether you're either a product or a service.
Yes.
And if you're in the watching us live, type in any questions you may have. What do you feel like your most important KPI is? And we can talk. Let's talk about what KPI is and how to measure that.
Okay. So KPI, which stands for Key Performance Indicator, KPI is the measure that you need for your critical success factors. We call it CSF. Critical success factors are the things that you need to do consistently well to be able to stay in business, to dramatically improve your sales, your marketing, and everything that you're doing. But you have to measure them. What gets measured gets managed. What gets managed gets done, and gets done well. So that's why the KPIs come in. And there are different types of KPIs that are out there. But I'd say KPIs are anything that you can measure 24/7 or weekly. If you wait till the end of the month to measure it, it really is not a KPI anymore, because you need to be able to react to something at the moment it happens. And that's what a true KPI represents. Let me give you an example here where most people might relate to this. For example, take the airline industry. The airline industry, one of the key KPI that they measure all the time, every day, every flight, is the on-time departure from the gates. If a plane does not leave on time from that gate, it's going to cost them money. And the minute that happens, some senior manager's light is going to go up at his desk telling him that that plane is still sitting at the gate. And he's going to pick up the phone and call the manager for that area and say, what's going on? Why is that plane not off the ground? They're only making money when they're in the air. They don't make money sitting on the ground. That's a key KPI for the airline industry, is on-time departure from the gate.
And as far as KPIs for a business is number of sales calls you have, number of people who answer that call, number of appointments set, and that leads to conversions. So if I know I need to make 100 sales calls in order to convert 10 clients, then if I make 50 sales calls, the odds are I'm only going to close 5 clients.
Yes. And again, it's important. I'm happy you're measuring all these metrics. So when I tell people, know your numbers, do you know your numbers? They assume that I'm only talking finance. No, I'm talking about the whole gamut of numbers, all your metrics, your cost per lead, your customer lifetime value. Those are all key KPIs that you need to have. Your inbound marketing return on investment, traffic to lead ratio. Those are all important KPIs that you need to have to know what's going on in your business, especially today, where social media is such a key item in everybody's business. You need to know your social media traffic and the conversion rates. How many people are coming to your site? What is driving them to your site? How many of them are you able to convert? What are you using to convert them? Are you using video clips? Are you using discount coupons? You need to be able to know all those things. If you don't, then you don't know where you're spending money. The only way you can be good in your business is to know where you're spending money and know where you're getting money from. That's the more important thing. Know where the money is coming from, what's driving them in, what's bringing in the customers, what's bringing in the clients. And you reward that area more than you do the other areas where you don't get stuff from.
Yeah, so one of the classic comments, I think it was brought up a number of years ago, maybe 5-10 years ago, by a guy who used to handle the social media for Ford. His name was Scott Monty. And he was saying, what was the ROI of social media? Because people aren't actually getting cash back from their ROI. But they also compare that to what is the ROI of putting your pants on before you go to work. You may not see a bad ROI if you do it, but you definitely will see an adverse ROI if you don't. And so he's basically talking about investing in social media. And then this other term I came across lately called ROT, which is return on time, which is kind of what we have here. Is our audience is investing their time here to watch this video to get more information. Also, they're investing their time to support me. So not all return on investment or is a cash flow basis. Sometimes it is based on investment of your time.
Yes, again, like we were talking about. So, us in business, especially solopreneurs and one-man shows, you have to go to all these networking events to try to meet people, press the flesh, as they say, introduce yourself, introduce the services to people. You've got to stop and think, okay, it takes me maybe 30 minutes to drive to that location. I spend an hour there, take me 30 minutes to drive back. So that's 2 hours of your day gone and the gas. How much do I get out of that? If you're just going for as a social event, then fine, you can go all you want. But if you're going to meet people, get customers, before you leave in the morning, you need to say, okay, how many people do I need to talk to today that I think are potential clients? And how many of those do I need to convert? If it's working for you, you're meeting people, you're converting people, I'd say continue going to that event. But if you've gone to that event 6 months, a year, and you get nothing out of it, that's money that you're spending. Consider another event. That's the return on your time that you're talking about, and the return on your investment, because it technically is an investment. I tell people, marketing ends up on your income statement as an expense, but it really is not an expense. It's an investment. You have to market to sell, whether it's your service or your product. You have to market to sell. So I advise people, see marketing as an investment, not as an expense.
Well, again, if you're actually returning on investment, but if you're spending $1,000 and return is only $600, then it's costing you money. Unless, of course, there's an alternative, like you said, networking, building that know, like, and trust factor with your people that you meet. And then maybe down the road, maybe you're playing the long game. Maybe you're not going to close them in 30 days, but maybe in 6 months from now, they refer you to somebody that they met because they trust you with your expertise and refer you, and that creates a product that generates like maybe $5,000 or $10,000, and then that weekly investment of going to that meeting has paid off. But
Yes.
you're playing the long game, and not the go to one meeting. Nobody hired me. I'm not going back to that meeting anymore.
That's correct. I mean, again, you can't expect people to know, like, and trust you after they meet you one time. No, they have to really know you. They have to really trust you, and then they have to really like you. Because once they recommend, if even they don't work with you, they recommend it to somebody else, they are putting their integrity, their name on the line. So they have to know that if you say you're going to do A, you're going to do A and do it well before they will introduce you to somebody. But you're correct. You can't just go one time and say, oh, nobody signed me up, so I don't go anymore. That's not realistic. You have to be realistic. That's why you set a plan. You set a plan, I'll go to this thing for a year and see how it works out for me. If it doesn't work out for me, fine. Well, like you said, maybe at the end of the year, you might have one referral that could bring you enough money to cover all the time you spent going to that meeting for a year. You have to look at it from that point of view, and like you say, to play the long game, not the, oh, I go today and I get somebody to refer me to the next day or somebody to hire me the next day. It doesn't work like that in the real world. It definitely doesn't.
So one of the things that I did early on is I calculated a calculation for pricing out 1 hour of my work, because I know I don't work 8 hours a day, although sometimes I have worked 16 hours a day on a project, but not every day. And if you work 16 hours a day, every day, you're going to burn out real quick, and it can be a diminished amount of return. So one of the best calculations is, how do you calculate 1 hour of work towards your product? Because if you're selling your product or your services, it's more than just your time, right?
Yeah, you got to spend time to prepare and all the other things that you have to do to make a successful sale and to do the job well. So one of the things I tell people is, the way I like to look at it is, how much money, what's my worth? How much money do I think I'm worth for the year? Okay, so if I think that I'm worth $100,000 for the year, I take the number of hours in the year that I want to work. It's usually start off about 2,040 hours in the year, but you have to back off for vacation, for weekends and all that. And then you come up with the true number of hours that you have. And then you divide that by how much money you want to make. That will tell you what you're worth per hour. And with that, you can go forward and say, okay, I have to price my service this way because this is how much it's going to cost me. But that's only one piece of it. Now you have to add on top of it all the other things, like your overhead that we're talking about, and then profit, because the money that you make in terms of what you get paid, that's your salary. And most people sometimes don't even think about salary when they're doing their pricing of their goods. But you have to pay yourself first. And then you put on top of that whatever profit you want that goes in the bank. Remember, the salary and the other amount of money, they pay the utilities and all that stuff. That you don't see. What's left over after that, the net profit before tax, that's what you're interested in. And that's why you need to know your gross margin, you need to know your net margin and all that stuff. That's all accounting mumbo jumbo. But those are things you need to know. You don't have to be an accountant or a bookkeeper when you have a business, but you have to have the basic idea of what those things mean and where to go to get the information from your accountant, from your bookkeeper, so you can keep up with it on a regular basis. Remember, we're talking about KPIs. Some of those things you need to see on a weekly or even daily basis. For example, I had a client that I would say to her, how much do you need to sell daily? She had a store that she sold all kinds of things. How much do you need to sell daily to stay in business? And when I started working with her, she had no idea. So we had to cost out everything for her and tell her, this is how much it's costing you to run this business here. So on average, you need to sell $2,000 every day to stay in business. So if at the end of the week, you've only sold $2,000, you know you're behind for the month. You have to do something, whether you put some things on sale or whatever it is, you have to find ways to get people in the store. That's what KPIs do for you. You have to act. They make you act on something. Like I mentioned about the airline, if they're still at the gate, they're going to pick up that phone and call and say, why is it sitting there? And then they're going to make arrangements to get it off the gates as soon as possible. Make arrangements when they're in the air to ask for a higher altitude so that they can go faster and get to the next place to stay on track. There's a lot that goes into that, but you need to know the KPIs to be able to react to them.
Because you also mentioned gross margin, and gross margin is the price between what it costs you to make that widget and what you sell that widget for. And there are some products that you have a higher gross margin on or higher margin on than others.
Yes.
And so if you're making that $2,000 a day, you probably want to lean more towards those higher items that have a bigger margin, because you're making a bigger profit on those. Because if you sell 10 widgets or widget A's and 20 widget B's, but you're only making 10 cents on widget B and $1 on widget A, you want to sell more of widget A's.
Yes. So gross margin, Bruce, is the difference between the price that you pay and your variable costs, the price that you charge and your variable costs. That's the gross margin. And then from there, remember, you still have to take off your utilities, your fixed costs to end up at the net margin. That's what you're interested in. But you need to know you have to have a high enough gross margin to cover all the other stuff that's fixed. That's why, like you're saying, if your gross margin on item A is only 50%, trust me, it's not going to be enough to cover all the fixed costs to get you anything left over at the end of the day. You want to be doing business at a gross margin of about 80%, so that when you take off all the fixed costs that you have coming, you might end up somewhere 60, 50, maybe even 40%. And then remember, you still have to pay your taxes. If Uncle Sam comes for his own upfront, you have to give all that before something is left for you to take home. That's why you need to keep up with your gross margin. And you talk about selling more of widget A versus widget B. We call that the mix. You have to have a good mix of products to be able to sell, to get a good average gross margin, to be able to get a good net margin at the end of the day, to get something to take home. There's a difference between the money you have that pays the bills and the money you have that ends up in the bank.
Yep. Because in preparing for the show, I know this is July 7th. And so we just finished the first half of the year. Second quarter just ended. And so one thing I haven't done recently, but again, because I knew I was talking to you today, I updated all my KPIs. And one of the KPIs that I follow most originally is my average cost per customer, or my average purchase of sales per customer. So that I know I have some customers who buy products for, let's say, $100, but I've got other clients who can sell their bigger projects for like $1,000 or $1,500. So I figured out my average cost per sale, knowing that if I can do, let's say, 30 sales in a month, I can keep my doors open.
Exactly. And that's how you have to look at it, because you cannot get all the clients that are going to pay you $5,000 a project. You're going to have one or two that will do that. You're going to have a lot more paying you maybe $300, $400, $500 per project. So you have to have a good mix of that.
Yeah.
And you have to know the lifetime value of each client. There's a good chance the lifetime value of the client that pays you $5,000 is very short-lived. Maybe it's just a one-time project that you do, and you might only get it once a year or once every 2 or 3 years. But the person who brings you $500 every month, they're just as important as the one who brings you $5,000 one time. But you're right, you need to know the average customer lifetime value so you know who you're spending time with. I tell people, rate your customers A, B, C, and D, and you put them in that category. Your A customers are who I would go do anything for, because I know I can rely on them to pay me what I want at the time I want it. The other customers, I'll service you, but if I have to spend a lot more time on you and I don't get the money that I'm asking from you, you might be my C customers. So if you call me and say you want something done today, I'll tell you I have a list, you have to wait for 2 weeks. But if my A customer calls me, I'll drop everything and go do it for them. Because again, it's a demand and supply issue. So we got to think about all those things. Business is complex, but it's simple. But you got to think in multi-dimensions to be able to successfully keep a business going.
Right, because I'll have some clients who maybe they'll spend like $20 a month with me and on a continual basis, and they're with me for 5 years.
Yes.
And then I've got another client who come in for one job. A while back, a number of years ago, we used to do a lot of wedding videos. And that's kind of a one-time thing, because you're only getting married that one time.
Yeah.
But then we've actually built that into referrals, and sometimes they'll have more families. And there was actually one client, 10 years after we did his wedding, his brother got married. And they called me up and said, okay, my brother's getting married. You've got to do our wedding. And at that point, we had pretty much stopped doing weddings. But we brought our tuxedo out of mothballs and put it on and did the wedding because he was a good client.
Yes, yes. Yeah, and that's what you have to do. That's what you have to do. Those are all the things that you got to stop and think about as you go through, and you do the things that you need to do as a good businessman to know who you can bend over backwards for and who will bend over backwards for you. Those are your supply chain lines. You need to know what's going on there as well, so that when you need an item, you know who you can turn to quickly and get it. I'm sure you might have 3 or 4 suppliers, but not all of them are always going to be there and ready to give you what you need. Yeah.
So again, if you're in the chat, if you're watching this live, if you have any questions, definitely want your feedback. Here's a question. What is your most valuable business number? What's the most valuable number in your business? Is it gross profit? Is it net sales? Is it phone calls you make? Type that in the chat. Let me know. Also, let me know where you're watching from, because I know we've actually generated a international audience. And when we first started this podcast, we were pretty localized. I think we were lucky if we got out of Lake County, Illinois. But now I think we've got people watching from Canada and across the country.
Yes. So for me, my most valuable KPI that I keep up with is the number of new clients I get. That's the most important number for me, because again, like we said, clients only have a lifetime for so long. And if you're not marketing properly to keep the pipeline going, you will soon be out of business. Marketing is such a key thing to do in business. You have to keep your foot on the pedal all the time. So for me, the number of new clients I sign on a monthly basis, it's an important KPI for me to know. Because if I can sign up the client, I know I have the revenue coming from that. But if I don't have new clients coming online, a pipeline of new clients, then I know I might be in trouble. Because again, your clients only stay with you for so long, and then they move on to other things. Other things become more important in their lives. Like one of the questions that I like to ask my customers every time I talk to them is, what's keeping you awake at night? And you'll be surprised how different it is every time. Not that I have the answer to help them with every one of them, but I can be able to introduce other people to them and say, hey, you have this issue going on. I know Bruce is good with videos. Talk to Bruce, he can help you out. But yeah, again, it's different. But for me, my most important KPI is the number of new clients I have coming in on a monthly basis.
And so great. Anything that we want to close with? I know you've got your own business, your AHA Business Advisors.
Yes. I'm sorry. What I'd like to close with, Bruce, is that in this very trying time that we're all in, I have a few clients, and none of them is staying stagnant. Some of them are doing very well during this time, which was unexpected, but because of the type of business they have, there's needs out there. Some of them are not doing very well because, again, of the time that we have. So what I would suggest to everybody, this is a good time to go and revisit your business plan. Get yourself in a place to survive the new normal, whatever that's going to be. Be flexible, because this thing keeps changing all the time. We hear the new things that are happening with COVID. So you have to put yourself in a position to, at the end of the day, you come out on top of this. If you come out of this situation with a business, you've done well. If you don't make any money this year, but you come out with your business alive, you've done well. Be happy about that. But then make plans now to become even stronger going forward when COVID is all over with and we are back to some sort of normalcy. That would be my advice to people. And again, reach out to somebody. If you're thinking about things and you're not making any progress, reach out to somebody. Reach out to Bruce. Reach out to myself. Reach out to some business coach or an accountant somewhere. Reach out to somebody, but do something different and be prepared when this is over with to come out strong.
Yeah, because I think when COVID first hit, I was talking to some other business coaches, I was hearing that they were cutting back on their coaching sessions. And my response to that was, this is the time you need your coach more than ever.
Yes, I completely agree with that. This is the time you need to talk to somebody more than ever, because again, nobody is an expert in everything. So take many counsels, and then you determine what's right for you. There has to be somebody out there that you can work with. All the great sports people, all the great musicians and all that, they all have coaches that help them along. So what's wrong with you? Why not?
Right. Excellent. Well, thank you again. And those who are watching live, thank you for watching live. And if you haven't already subscribed to my YouTube channel or follow me on my Facebook page, please do so. And also definitely connect with Aki. I'm sure he'll be glad to talk to you, maybe just put you in the right direction if you've got your own questions about what is the next step in creating a business, or which KPIs should I be looking at.
Okay. Yes. Thank you very much, Bruce. Have a good day.
Well, thank you. Thank you for joining me. And I'll talk to you after we finish the broadcast.
Sure.
Again, thank you very much. And let me close out with our end screen. Thank you very much. And please follow and subscribe.